Today we will be looking at a profitable day trading strategy. Before we do, if you have not watched the first videos on the channel and the videos after that, you need to go do that now. Here at the Academy of Forex, we are building the best trading system possible as a team. You can find a link down below to sign up for TradingView. If you use that link, you'll save a little bit of money on your account. You can also find a link below to join us on Discord. If you are interested in a full list of all the indicators and strategies that we have tested along with their win rates, you can sign up for our Patreon. And you will receive a full list of all the indicators and strategies that we have tested. You can find a link to our Patreon down below in the description. We also have a Patreon-only exclusive Discord channel where we will give you a list of winning indicators, a list of winning strategies, post-trade ideas, give advanced advice, and much more. So click the link below to join our Patreon. Alright, as I said, today we will be looking at a profitable day trading strategy. Before we do though, I wanted to put the testing scoreboard up for everyone to see. Now, if you are interested in a full list of all these indicators and strategies along with their win rates, we've compiled all that information into spreadsheets, which you will get when you become a patron of the channel. Keep in mind that we test most of these strategies and indicators on the Forex and crypto market, but they can be applied to just about any market and time frame universally. Okay, so today we are looking at a profitable day trading strategy. In our last strategy testing video, I outlined how to use the Z-score probability indicator combined with our custom indicator that we developed here on the channel on a 1 hour time frame with crypto to get a really good result in trading the crypto market. I believe that was able to achieve an 84% win rate. If you're interested in that strategy, then you can go back and watch that video. I can link to it up in the corner right now. But what I've done is I've taken that strategy and made a few small tweaks to it so that way we can drop down to a lower time frame on the Forex market and use it as a scalping strategy, a day trading scalping strategy. And now keep in mind, anytime that you drop down to a lower time frame, the lower time frame you go, the more kind of unstable, unreliable indicators and signals start to get. And so we went from the 1 hour time frame to a 15-minute time frame in this particular version of the strategy. And so of course, we're using the Academy of Forex scalping strategy indicator here on the bottom of the screen. Again, this is our custom indicator here. And the very short version of this, if you haven't seen the other videos, is it gives these S tags here and B tags here. And so in just using the indicator itself, you would take a short when it gives any S tag, and you would take a long anytime it gives a B tag. Now, there are quite a bit of other options and features to this indicator that I've turned off that you can explore that will also help to increase the win rate of this particular indicator using it just as a standalone. But what we have done, and like I said in the last strategy testing video, was we added on the Z-score probability indicator. And so the Z-score probability indicator basically gives these bands here, and these bands here show a deviation of price. And so we also turned off the Z table here, and so you can see this here is the Z table. Kind of gives you an in real time score of where the Z-score probability indicator is at that particular time. Tends to get in the way quite a bit, and I don't feel like we actually have to have it in place, because you can see visually here it's showing us where the Z-score is currently kind of in place with these bands. And so the farther away from the middle basically means the farther the farther deviation there is in the price action. And the farther deviation there is, the more likely we're going to see a return to the average, or a return to the mean. And so what we're looking for is when the Z-score indicator, the background here kind of spikes out into the farther reaches of the indicator. In the last strategy video, we looked for it to stretch out into the red zone, and then we would look for a signal on the Academy of Forex scalping indicator. In this version, since we did narrow it down to a lower time frame, then what we're looking for is when the Z-score background here goes into at least the yellow zone. Once we get the Z-score indicator into the yellow zone, we are then looking for a signal from the Academy of Forex indicator down here at the bottom. And so we'll go ahead and take a look at a couple examples here. And then of course we're going to follow our kind of best practices when it comes to trading the Academy of Forex indicator that I've outlined a few times before. And so we'll just go ahead and look at, let's see. So right here you can see that the Z-score spikes up into the yellow area right here, and we're going to track along, and right here we get an S tag from the Academy of Forex indicator there. And so what we're going to do is we're going to measure up to the last swing high, and we're looking at just the bodies of the candle. That's going to be our take profit. So 5.3, roughly 5.5 is going to be what we're looking for as far as a take profit. And then we would set our stop just right above the last swing high, but the wicks of the candle. So just right above it. So right about here, you can see this wick on that candle right there. That's where I place it. And then of course we're targeting that 5.5 pips to the downside. And you can see that we get there really nicely, getting us a winning trade there. And so now moving along, you can see that the Z-score spikes to the downside here. This time it gets all the way down into the red, and we track along here, and eventually right here we pick up the buy signal there from the Academy of Forex indicator. And now in this particular case, if we look here, so let me move this out of the way. So you can see these wicks right here. Now, again, we want a continuation of price in the direction that we get the signal. And so you can see here that price kind of stumbles around a little bit right here and starts to pull back. And so you wouldn't enter this trade immediately, because you would wait for price to kind of break up a little bit more to the upside, about 1.5 to 2 pips roughly to the upside, to then have a valid entry. And so you would wait for price to break above these wicks right here. And what you can do is, if you want to be a little more cautious, then you can say that break to the upside has to occur within 2 or 3 candles, and if it doesn't, then it's not a valid signal. And so in that particular case, we wouldn't have a valid signal here, but let's say that we did. We get that break right here. Again, we're going to measure down to the last swing low, and we're looking at the bodies of the candle. So about 13 pips is what we'd be targeting. Our stop would be right below that swing low there, any of the wicks, and we would target to the upside. You see that we get a nice push, and that would have got us to our take profit. So one more time here, we'll look at a short. Z-score spikes to the upside here, hits our yellow, goes into red, and then goes above the red. That means that it's really far deviation from in the price there. And so we then look for the sell signal right here. And again, we wouldn't enter it immediately, because you see price doesn't push to the downside immediately. It kind of stumbles along for a few candles there. And then we get that spike to the downside. We would be targeting, once again, measure up to the bodies of the last swing low. 5.5 pips is what we'd be targeting. and we would set our stop right above those wicks on that swing high there, and we get a nice push to the downside, once again getting us to our take profit. So again, this is kind of very similar to what we've outlined on how to use the Academy of Forex indicator itself. In this particular case, we're adding the Z-score just to kind of solidify the chances of getting price at that point where it's really overextended and wanting to come back to the mean. And so that's essentially what the Academy of Forex indicator is doing, is it's looking for when price is overextended and is trying to come back to the average, basically. And so let's go ahead and go over the numbers on this. So this particular strategy here, we get 50 trades, we got 40 winning trades and 10 losing trades. So that's going to put us at an 80% win rate. And so it's a little bit lower than when we did the hourly crypto trading strategy, but again, when you start dropping down to these lower time frames, you're going to lose a little bit of that win rate and that reliability. But using the Academy of Forex indicator itself, I think we were right around a 74% win rate kind of consistently in Forex on the 30-minute time frame. And so that is a decent little jump up there in the win rate. Now, the Z-Score Pro indicator you can find just on TradingView. If you type in Z-Score, the Z-Score probability indicator, type in Z-Score Pro and it pops up right here. The Academy of Forex indicator down here at the bottom is a private indicator. And so to get access to that, you will need to sign up for our Patreon. You can find a link to it down below in the description, and you'll need to maintain your Patreon status to continue to have access to it. Now, it was coded out and optimized by Mike from Upright Trading, and so he's put a lot of work into this indicator. He's one of our admins on the Discord server. And so when you sign up to our Patreon, you'll get a link to the indicator where you will get a 7-day free trial, and then after that it is $15 a month to continue to have access to it, plus the Patreon access as well. You'll need to maintain that. And so to help Mike out for all the time that he's put into this, again, that $15 goes to him, and then the Patreon goes to the channel to help support us here and keep things going and help us continue to do these videos and test strategies and develop things. And so, all right, that's it for this video here. We're going to go ahead and cut it here. That way it doesn't get any longer, and we will move on to the next video from here.